Hey everyone, welcome back to Upside Down Data. Today I want to talk a little bit more about the rally we're seeing and some things we might like to see to become optimistic of this being able to continue versus us just thinking that this is likely the top and us moving back down further. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there. So, a lot of people have been looking at this rally and there's been a lot of mixed reactions to this. There are a lot of people on crypto Twitter who are just calling this a bull trap, that we're just going to fall to new lows any minute now. And then there are also people who are turning bullish and calling, for high prices, some, in my opinion, quite unrealistically high prices like, 48K or something like that. So what I want to talk about a little bit right now is what, is going on with Bitcoin's price action, to some things that I'm looking at and some things that our models are seeing in the data, just to kind of orient us to what we can think about this rally so far. Is it time to just hang up the hat, say the rally's over, or is there any possibility of it continuing higher? So let's start by talking about Bitcoin. I'll talk about a couple other assets and other indicators in a minute. Let's start with Bitcoin here. So one of the things that's interesting about what Bitcoin's price action is doing right now is if I overlay the 200-week moving average, that's this red line. So this is on the daily chart, but this is the weekly 200 weekly moving average. What we can see is that Bitcoin is right now attempting to turn the 200-week moving average into support when it had acted as resistance on this prior move up. You can see we bounced exactly off the 200-week moving average, moved down. Now we're trying to turn it into support. And the reason that this is important is that if we just go back and look in Bitcoin's past, we can see that in prior bearish points for Bitcoin, prior times we've gone down and revisited the 200-week SMA, we've gotten back above it relatively quickly. And then that has then catalyzed some nice moves into the future. It kind of is this reversal point. You want to be able to get above and stay above the 200-week simple moving average in these bearish times. We did it in 2018, did it back here in 2020. And if we go all the way back to 2015, we did it twice, where we fell below the 200-week moving average here, but then got back above it relatively quickly, fell below it for kind of a little bit more time, came above it, fell below it, and then got above it back here later on in 2015. And so generally speaking, if Bitcoin is going to continue kind of this nice general upward movement, we'd like to see us be able to reclaim the 200-week moving average and actually hold it as support, and then maybe eventually be able to move up, or at the very least, get above it for a while, even if we have to dip a bit below it, like what happened in 2015 before going back up. You just like to see us spend some time up here. Because what would be really concerning, and what was already frankly concerning to a lot of people, is just how much time we already spent down below the 200-week moving average. And now, it's only been a couple days that we've been above it. We'd really like to see us build some support up above this level if we're going to repeat those same historical patterns. Now, obviously, there's nothing saying that we have to repeat those patterns, so there's no guarantee that we're going to hold support here at the 200-week moving average. And even if we fell below it, there's nothing to guarantee that we couldn't, still hold this general range here. But if we want to see the kind of price action we've seen before that tends to mark kind of high value bottoming zones, when we break above, we'd like to spend at least some time above it and more or less start consolidating around it, turn it into support. That would be kind of the ideal situation. So it'll be interesting to watch this in the coming days. We just had a daily close now where we closed back above it. So that's 3 daily closes in a row above the 200-week. I personally would like to see us continue to close above it, turning it into support, ideally, at least for a while. And certainly, we'd like to see us put in a weekly close above it, because right now, we're just so far within the middle of this week. If this just turns out to be a wick, that's a lot less convincing than if we can start closing, especially consecutive weeks above the 200-week simple moving average. But that's Bitcoin. Bitcoin's only one of the assets that's part of this rally, right? Really, I think a lot would argue that the bigger asset that's leading into this is Ethereum. So Ethereum being the second largest crypto asset by market cap, it makes waves when it rallies, right? It's not inconsequential. When Ethereum is moving nicely, it's going to make an impact on the total crypto market cap. It's going to have an effect. And we can see that Ethereum has done quite a nice job moving up. And it's actually interesting to note that if we look at Ethereum's 200-week simple moving average, it actually had been kind of playing with breaking above it for a couple of times in these past runs, and now finally it's cleared well above it. And so from that perspective, Ethereum is showing more momentum than Bitcoin. It's been able to get higher above and close, multiple days now above its 200-week moving average, whereas Bitcoin is only starting to do so. So Ethereum has absolutely been leading this rally. And so just as we'd like to see Bitcoin, hold the 200-week as support, then move up probably for this rally to continue, really, I'm really watching Ethereum closely. Can we break through this resistance that's shown up here at around the 1600 level and start moving up to these higher levels? Because that could then mean that more energy, more momentum will enter the crypto space generally, which could also actually help Bitcoin. So I think we're kind of at a point now where Ethereum, it used to be the case that Bitcoin rallying would then lead to money moving into Ethereum and helping it. We actually might see kind of the opposite play out to some degree now, where Ethereum moving up, people might start taking profits out of that, moving into something like Bitcoin, and then move it up. So some interesting potential changes in the normal dynamics as, the kind of Bitcoin dominance is being lower over time. Things like Ethereum matter more. And I think we can see this if we just look at the total market cap for crypto. Because one of the things that has been happening over the years, as I just mentioned, is that Bitcoin dominance, the share of the total market cap that's denominated in Bitcoin, or that Bitcoin holds, it's getting lower and lower and lower over time. And so in some ways, it's almost maybe more useful to look at the total market cap to see what's going on in the crypto space than just Bitcoin. I mean, Bitcoin, a lot of people use it as a proxy for the general health of the market. But so in some ways, just looking at the crypto market cap itself might just be a more useful gauge in some ways. And one of the really interesting things about the total market cap compared to Bitcoin is the total market cap has actually been holding its 200-week simple moving average quite well as support. It closed below, then got right back up, in this kind of big capitulation back here in June, in mid to late June, came back, held as support again back here at the beginning of this month, held as support again, more or less, middle of this month before this rally, and now we're back up. And so, one of the things that's interesting about that is that, there's a lot of kind of hemming and hawing and concern about Bitcoin spending all this time below its 200-week. But again, if Bitcoin is just supposed to be a proxy for the health of the crypto market, if we just look at the crypto market as a whole, it actually was holding its 200-week SMA quite well, in ways that wasn't totally dissimilar from how, in some ways actually better than it's held it in some of these past moves. So I think it's just an interesting thing to look at. I think a lot of people are still very focused on Bitcoin, and I think fairly so. Bitcoin is still very important, but sometimes I think we kind of forget to zoom out and look at the crypto market as a whole and what it's doing. And it tells a bit of a different picture, like we can see here, compared to what we just saw with Bitcoin. Now, that's just some things in terms of the market that we see kind of overall, the total market kind of holding that 200-week kind of critical support level nicely. Bitcoin starting to try to close above it, and Ethereum closing above that level on its own 200-week. The other thing, though, that we have to keep in mind is that Bitcoin, Ethereum, total crypto market cap, all of that stuff is subject to macro forces, to macro environment, and very much, what the stock market's doing, what other risk assets are doing. And one of the things that we've been seeing, more recently is ever since, kind of mid to late June, when also crypto had its big kind of, fall off, kind of capitulation down, set in its local bottom. Equities also set in their local bottom. I'm showing the S&P 500 here. And now there's just been a kind of gradual move up, not nearly as stark as the crypto rally, but there's been a nice move to the upside here. A nice, at least so far, bear market rally. We don't know if this is really the turning of anything. So far, it could just be a bear market rally, but it's decent so far. And certainly these kind of movements in the stock market, this is the NASDAQ I'm showing you here, very much a similar story, although a little bit stronger of a rally. This is the Dow Jones, also telling a similar story. This is certainly helping, and this is certainly facilitating the ability of crypto to keep moving up, because if people are seeing green across the markets, then that might mean there's more risk appetite. People are more likely to throw money back into crypto. Whereas if we saw the stock market tanking right now, I don't think crypto would be doing so well. So I'm personally watching the stock market very closely during this crypto rally. If we see this start to peak and start to fall off in a notable way, I think crypto is going to fall in lockstep with it. So we can keep an eye on that. And a similar thing that we can look at as well is the DXY, which is basically the strength of the dollar relative to other fiat currencies. One of the things that people have noted in the past is that when the dollar is doing well, crypto doesn't do well. And we've really seen that, ever since, really ultimately when the dollar started taking off, back over here later on. I mean, it was kind of moving this way the whole time, but this big kind of move, this acceleration in the dollar here really coincided with the sell-off in crypto. And one of the things that's been happening over the last couple of days is the dollar has actually been trending downwards. But again, if the dollar starts charting a course back to the upside here, if it catches the local bottom, moves up, I'd also expect crypto to start falling. So this is another one to watch closely. If you see the dollar continuing to fall, that's just going to be more and more tailwind for crypto. If the dollar starts to recover, that might mean that this rally will start to lose some steam. Okay, so those are a bunch of things that we can look at in the kind of more macro markets and just in the crypto markets generally. I want to flip over to some of our indicators here at the channel and just show kind of what they're looking at like right now in this rally. And so the one thing I want to look at here is the market direction classifier MDC for Bitcoin. So this is the Bitcoin MDC level. If you're not familiar with this model, it basically just looks at the price action of an asset and it creates a critical level that it thinks the asset needs to be above to be bullish. And if it's below, then it's a bearish indication. And so what we can see is that, it's done a pretty good job of identifying relatively early these bearish movements that we've seen in Bitcoin. And I put out some videos recently where I talked about how it recently flipped green. We recently flipped it over it somewhere a bit above 20K. And then it's been off to the races since, at least so far. And so far, so good. So the critical level it's watching is 20,675. It is starting to curl up, you can see, and I expect this to continue rising as Bitcoin's price might continue to rise, and so it might come up to start kind of meeting the price a little bit higher. But really, from this model's perspective, as long as we stay above this level, it doesn't see any reason to be especially concerned yet. But just something to keep in mind. Doesn't mean that we can't come off, crash down from here. But, this is the critical level it's watching. As long as we stay above it, it's going to remain bullish on the asset. So, see the same thing for Ethereum as well. Ethereum flipped green relatively early and then shot off to the upside. And, it's looking at a critical level well below the current ETH price. Looking at a critical level currently of about almost $1,200. But again, not really seeing any sign for concern yet, although the critical level is starting to rise up as well, meaning that the model just basically going to demand Ethereum to show more and more strength. And if Ethereum can't, it'll then flip bearish. Now, another asset I want to talk about here, which I didn't talk about earlier, but I think is just an interesting one to look at, is actually Matic, or Polygon with the native token Matic, because this is one of the ones that's actually been doing quite well during this rally. Currently up, especially from the lows, it's well up, and even from just when it flipped the critical level here, it actually got up to around 100% move to the upside. And so the MDC is currently looking at 57 cents, and again, Matic, when I last checked, was around 90 cents in that ballpark, and again, had gotten even higher than that before pulling back a bit here. So really, from the MDC's perspective, this is a strong rally, and it's not really concerned yet. But you can see, again, the critical level starting to curve up towards it, and so that's probably going to continue, requiring more strength out of Matic. Now, this purple line here, you might be wondering what this is. This is just the 20-week moving average for Matic. I just thought this was notable because more or less Matic bumped its head and got rejected off the 20-week. So that's just something we're going to have to watch with it to see if we can get above. But really, the reason I'm showing you these three different ones is that this has been a relatively broad rally in the crypto markets. A lot of different assets have seen some upsides, some more than others. Matic being one of the big ones that's also been a winner in the more altcoin space. Then, of course, Ethereum being the biggest, the big dog that's really been moving with, Bitcoin also putting in some nice upside. So, just some things to watch. If we start seeing some of these start flipping bearish, then I'll be, that would just be a confirmation that the rally's over. And there are also some other indicators we can look at to get an idea of how close we might be to kind of a local top here. So what I'm showing you here is for Bitcoin, the short-term upside-downside potential indicator, which is our risk model. So this is a version of the UDPI that cares about moves that play out over days to weeks, so much more short-term focused in its assessment of risk. And it's volatile. It's reactive to these short-term movements. And so we can see is that during these bearish times, where generally speaking, the short-term risk is relatively, is relatively in the lower bands, but then there's a lot of volatility. We can look at where resistance shows up on the shorter term UDPI. And what we can see is that we're kind of at that general range already to some degree. You can see back in 2015, -2 kind of more or less acted as a resistance zone, with occasionally us popping up to -1. We can actually see, though, that in 2018, we got these ripping bear market rallies that would go up and more or less treat 1 or 0 as their topping points. Then actually, interestingly, the move up in 2019 also actually kind of twice saw 1 acting as a resistance point. So as we're going now, this could be a plausible resistance point that we're already at, right? If we're seeing a move something like this, we're already there, or even just a move that we saw a reversion back up there just before this big final capitulation in middle of June. We're already at that level again. So this could be one plausible place for a rejection, and especially we start seeing things like the stock market roll over or the dollar start rallying. I would expect this is about as high as we can get on this on a short-term risk perspective. But if we can clear those levels, then really the next level to watch, to some degree, is -1, but then also 0. If we can clear up into this kind of risk band, generally anywhere around here, I'd start to get a lot more concerned. I really don't think we're going to get up to above 1. I think that would be highly unrealistic. So if we get up to 1, I will be getting very short-term bearish. So right now, I think there's, some moderate reason for concern in the sense that we've already realized some upside. But I think it's plausible we could see quite a bit more. So I'm kind of looking at this as being not too deterministic. It wouldn't surprise me if we get rejected here. But I do think there's a reasonable shot we could shoot off to one of these other ones if broader market conditions allow. And one of the kind of external factors we might want to watch is the Fed FOMC meeting that's happening, I believe, next week, where they're again going to be raising interest rates. See what they do. If they kind of have a surprise to the upside, or if they give extremely hawkish language during that meeting, that could then scare risk assets and kind of bring the end to all these rallies. If we get a more of a surprising dovish or just really just what's already priced in to the market kind of readout from the Fed, then I think we might be able to still see some more room to the upside. So those are just some factors that I'm personally looking at. And really one of the things I'm really kind of going to be keenly watching here is, can we turn the 200-week moving average into support? Because if we can, that is a lot more hopeful of this being able to become a bottoming structure than if we just get rejected off of it and fall back down. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there.